Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Hey gang, welcome back. Today we've got a very extra special guest zooming in from Malibu. Kathy Fettke has been in and around real estate for quite some time. You wouldn't know it from looking at her, but she's definitely a real estate pro. She's been a very active and real estate investor for many, many years. She's been a podcaster since before podcasts were even a thing. She's built up an amazing community and helped over, I believe, 80,000 people learn and get involved in real estate. I believe these days she's working a lot with turnkey properties as well as syndications. So Kathy, welcome to the show. Great to have you.
Thank you so much.
Well, that was a mouthful. You're up to a lot of different things, but let's zoom forward to 2026.
Yeah.
When it comes to actual real estate investing, what do you guys focus on most these days?
Oh, I'd love to say it was something new and special, but it's just what we've been doing for 30 years.
Nice. Well,
Which is, yeah. I mean, I veered off my path many times and tried new things and done new things. And I always look back and say, why didn't I just do the thing that I know works? And it's so easy to get distracted because there's so many ways to make money in real estate. You just got to pick one.
And then the worst thing is when you interview a bunch of people, all these new things sound so cool. So you kind of want to take a look at them, right?
Totally. And I'm not saying you shouldn't try new things. You just have to know that when you do, you're a beginner. So even if you did 20 flips or 100 flips and you're good at it, that doesn't mean you're going to be good at, say, multifamily or storage or whatever. Everything is its own business. So anyway, what I'm doing for 2026, like I said, is what we've been doing forever. And that is mainly buy and hold real estate. I am obsessed about kind of finding where the strongest markets are. I like to be in markets that are positioned for appreciation, and nobody can really know. I mean, it's speculative what's going to appreciate, but there's signs. There's signs, and those signs are what I'm always looking for, which is job growth, population growth, and yet the property values are still affordable. So when you find that combination, and then at the fourth pillar, I guess you could say, is a city or a state that's investing in itself, in their own growth, infrastructure growth. They see the population trends coming. They see the job growth coming. So they've got to bring on new freeways and new hospitals and new schools. And that just kind of feeds the growth. Then I feel like you got yourself a winner. So I'm always looking at what are the trends, what businesses are growing, what cities are welcoming that growth, and how can I buy real estate and just hold it? Because I just kind of like the good old boring real estate.
Well, okay, but there's lots of different kinds of real estate that you can buy and hold. So what's your favorite these days?
Honestly, I've had the most success in 1 to 4 unit hold.
Okay. Yeah.
We've been syndicating for 20 years. We do land development and subdivisions, and that can be just like flipping. If you have to sell something on a certain day, you don't know what that day is going to be like. You just don't know if the market's going to be up, it's going to be down. It's more like day trading. So I've done a lot of syndicating, and sometimes we've knocked it out of the park, and sometimes we're still like struggling to get through to the finish line. But the good old buy and hold real estate, that is where I've made my money. And that's where we've seen so many investors at Real Wealth make the big money. Because what I assure you is that time will pass. If you're lucky, you'll live long, a long, healthy life, and you'll be around. And what we've seen for centuries, definitely decades, is that real estate tends to go up in value. I want to kind of rephrase that. I'm not even sure that the real estate goes up in value. What we do know is that the dollar gets devalued. The dollar is probably worth 90% of what it was, a few decades ago. It just
no, not even a year or two ago.
Yeah. It just gets devalued. So it's not even like real estate's gone up. It just takes more dollars to buy it, and so you could kind of get ahead of all of that, the inflation and the currencies that are just the paper currencies, and get into real assets that inflate. They're usually ahead of inflation. And I think that's just how true wealth, real wealth is created.
Well, speaking of real wealth, you've been involved with helping kind of everyday folks get involved in real estate and real estate investing for quite some time now. So is that basically the model that you encourage people to follow, is buying the single family homes or the duplexes, triplexes, that sort of thing in these kind of markets and building
Mhm.
up a portfolio over time? Is that kind of the
That's what
methodology?
we've been teaching for 30
Yeah.
years. And, for the past 30 years, that's really worked in our favor. And we focused on that because of demographics. We
Mhm.
knew that we had a huge baby boomer population. There was a much smaller Gen X population, and that group came to kind of first time home buyer age right in 2008. So
Mhm.
that was a really tough time. There were just not enough buyers
Right.
at that time, and that was part of the downfall. I mean, obviously, bad loans were too. And then the baby boomers had kids, and those kids are millennials, and that's another massive population. That group, the largest of that group, is now at first-time home buying age. So when you just look ahead at demographics, you don't have to. Again, it's not like day trading. Demographics are pretty easy to figure out, right?
Right.
You've got we've known for 30 years that the babies 30 years ago would become 30 something,
Right.
and that's generally when people get married, have kids, and need housing. And we've known for 30 years this is a massive group, and yet there wasn't preparation for these people. There wasn't enough housing for these people. So we could see that coming, and we knew that housing was going to be a great opportunity, especially in the right markets. So yeah,
Mhm.
that's been my focus. We like multifamily too. It's just not the easiest thing for a newbie,
Yeah.
I feel like people know how to live in houses. You've rented it, you've lived in one, maybe you've owned one. So it's
Maybe you
not
grew up in one.
grew up in one.
Yeah.
Yeah. So it's not a huge stretch to figure out how to provide that for someone else.
Yeah, definitely.
Yeah.
So when you've got somebody kind of new coming onto your platform, what are the initial recommendations that you give them as far as like how to get into the market? I think you guys offer some turnkey opportunities for people. Do you
Yeah.
just try to make it as easy as possible for them?
Yeah, what how this all started was
Mm.
2004. I had my radio show in San Francisco, and I had guests on like Robert Kiyosaki. That was amazing. He's the one who kind of taught me the fundamentals that we use today, the job growth,
Mhm.
population growth, and cash flow. Like you want all of those things. You need to see a market growing, but it also needs to cash flow. Like I'm here in California, and we see our markets growing, but you're never going to cash flow. So I
Right.
learned that years ago, and yet I was a loan officer at the time, and the stuff people were bringing me, the stuff I was trying to refinance, didn't cash flow. It didn't follow any
Mhm.
of that. So I was like, I got to figure out where Kiyosaki's buying, where he could
Buying
get,
these
yeah,
properties.
where.
Yeah. It ain't
So
California. Right.
yeah, I was in California. In fact, he had said he sold everything in California to go to Texas, and that's what he explained. Texas was still 30% undervalued, and yet it had the highest job and population growth. So it was just easy. I just jumped on a
Yeah.
plane, went out, met with like 20 property managers to get a really good understanding of where the job demand was, where people want to live, where the easiest to manage properties were. The property managers will gladly tell you that. They'll let you know what they're willing to manage.
Okay. Yeah.
And I just came back with a few properties because back then you could do no money down financing. So it really wasn't too hard to do. But I talked about it on my radio show, and the phones blew up. People couldn't
Wow.
believe I was buying $140,000 properties in Dallas that were renting for $1,600. I was doing no money down. It was still cash flowing. So that's how Real Wealth was born. It was like I figured something out. It was this recipe that worked. People wanted to know, who did you use? Do you have referrals, property managers, insurance companies, and everything? And that's when Real Wealth was born.
Very nice. So what does it look like today, 20 some years later? What is the community all about these days? Because unfortunately, those kind of deals aren't so easy to find or come by these days. Or maybe I'm mistaken. Maybe there are still amazing opportunities like that. But that was kind of the go-go heydays of no
Yeah,
money down type deals.
It's honestly not that different. So
Nice.
if you were to go back to 30, well, when was it? 2005. So only 20 or so years ago. People made fun of me for this. They were like, "You're not really getting these homes at a big discount." I was brand new or very new. I didn't want to deal with renovations from a distance. I'm from California. I just
Yeah.
wanted to buy something ready to go,
Something simple.
turnkey,
Yeah.
simple, something that my tenants would love, that's not going to break down. It's like buying a new car, trying to get across the country and getting an old car or a new car. I'm getting the new car. I don't even care if it costs more money because the old car is going to cost more money over time. You're going to end up,
Right.
plus you'll end up, broke on a street somewhere in the middle of nowhere. So I didn't want that. I wanted a nice new property I didn't have to worry about. And yet, when I talked about it on the radio, I got so many experienced investors just laughing at me, just looking down their nose at me like, "Oh, that's not investing. You have to get a discount, and you get your money at the buy. You got to get
Yeah.
that all the things that you hear." And it was like, yes, it's not for me. I just want new and easy. And sure enough, because I bought it was really the market that I was buying in. Those properties have tripled, if not quadrupled, since then. And during just a few years later, we had the Great Recession, the biggest housing recession ever in 2008. I bought these properties in 2004, 2005. You would think that they would have just gone down like everything else, but no, they stayed rented because people who lost their home still wanted a home. They had to
Right.
rent it. So the
Yeah.
guy who lost his house next door to mine was like, "Hey, your house looks similar to mine. I want to rent it." So in actuality, our rents went up. I was getting raises, during the recession. And so today we're still getting that kind of cash flow. It's not that different. Maybe a different market. You're not going to be in Rockwall, Texas. That's where we started. A very nice place. Probably $400,000 to $600,000 properties there now. That's not going to be your cash flow market anymore. But the little rock walls exist elsewhere because businesses are looking for affordable places. So when they move to, say, Sherman, Texas, just an hour, probably over an hour north of where I first started buying in Texas, that is where you've got all this chip manufacturing coming in, billions and billions of dollars of chip manufacturing. So I started a fund, a single family rental fund for people who didn't want to own property themselves. They just want to, invest in our stuff. And we bought houses between $80,000 and $120,000 all around this old new infrastructure. And if you drive up there, all you'll see is new freeways and new hospitals and new schools. And so there's always an area that's growing. That's the fun part. You just have to find it.
Yeah. No, very, very well said. Well, that's exciting stuff. So what does the community look like now, 20 plus years since you started it?
We have over 88,000 members, which is
Wow.
amazing because when I did some live events, I'd be lucky to get 5 people, And so it's just grown over the years. I've done the podcast. One of the first podcasters, Rich, took my radio show in San Francisco when he saw that there was this new thing called podcasts, uploaded it, and suddenly I had listeners in 27 countries. So during the downturn, I had people from Australia, all over the world, trying to buy real estate at those discounted prices. But today, when you say that opportunity doesn't exist, it does exist. It's just that the people can't see it. They
Right.
don't know what to look for. I'll post something online and I'll get all this negative feedback about housing, about, prices coming down. And I'm like, okay, a couple of years ago, you would have bought this property when there were 90 offers on it and it went 100,000 over asking price. Now you can negotiate and get it for 50,000 under asking price, but you don't want to
And
buy
now you're
it.
complaining. Yeah.
Now rents have gone up, but you don't want the same property you would have paid too much for a couple of years ago. The mentality, people don't follow the masses. The 80% don't get it wrong. That's why there's the 20%. That's why there's the 1%. They don't follow the masses. The masses don't know what to look for. They don't get it. But yeah, we're seeing a stall. We're seeing rates going up, home prices up. The average millennial who's supposed to be at their first time home buying age isn't. They're not buying till 40 now.
Wow.
It used to be 32. So what are they going to do for the next 8 years? They're going to rent, and they want to rent a nice place. So now is the time. Like, it's just hard to see, but people are going to look back and say, oh, yeah, she was right. There's no housing crash coming. Actually, there's this demand and a softening right now, which is an opportunity for buyers.
So it sounds like you've got a few funds going. What kind of those are the kind of properties that you're buying with the funds? Is that correct?
Yeah. So, well, that's closed now, although we do have another single family rental fund we opened, but we now have a multifamily fund because multifamily is behaving like single family did in 2009. Because back in 2008, 2009, most people that were in they got their primary residence on an adjustable rate mortgage.
Yeah.
So when those rates adjusted, they couldn't afford the payment. I was a loan broker. I could see it all day long. Like, you can't qualify for this loan. When it adjusts, you're not going to be able to afford it. They go, oh, okay, I'll go to the loan broker next to you. They'll give me the loan.
Yeah.
Today, people in residential 1 to 4 units are on fixed rates. They're on 30-year fixed for the most part. They have very high credit. They have a ton of equity. But multifamily is now the new 2008 because so many operators were on adjustable rates. Those rates adjusted, as we know, from like 2% to 6%. Yeah. People can't afford that new payment, and we're seeing a massive increase in foreclosures in multifamily. So, but the problem is everybody's been waiting for that. This opportunity isn't a surprise. So lots of money on the sidelines waiting for all this to come through. So we decided to do a fund to have the money ready so that we can jump when we see that opportunity. There's just not time. There's not time. You can't say, I'm going to do 3 months due diligence and then raise the money later. You don't know. You got to be ready to go, know what you're looking for. So we are. And anybody who's got a good multifamily opportunity, let us know about it. We are ready to go.
Awesome. Well, as we're wrapping up, Kathy, maybe let's do a little shout out. Who are you looking to connect with these days in 2026?
Yeah, brokers, sellers of multifamily, people who want rescue money for their multifamily and pref equity. But also, just if you're new to real estate, at Real Wealth, we offer an enormous amount of free education. We've never charged for our education. Well, we did, I don't know, 10 years ago. And then our millennials who work for us said, we're known for giving away our education. Just give it away. So over 500 free webinars on asset protection, how to get the best loans, insurance, the best cities for growth. We've got teams in those cities with property management. So realwealth.com is where you can go, whether you're new or experienced.
Fantastic. Kathy, it's been a pleasure having you on the show. Thanks for sharing some of your wealth of experience and years of learning.
Thank you so much for having me.
All right, everybody. Thanks for tuning in, and we will see you again on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.